Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague Yatin Mota joining from the studios. Yatin, I hope you're enjoying the Mumbai rains. There's been a deluge of gains on the last week today thanks to the early Diwali gift from PM Modi, right? GST 2.0. Of course, the government is looking to do away with two slabs, which is 28% and 12%. That's something that has, of course, got the bulls going. We saw the Nifty clear that 25,000 mark today briefly, but we did cool off from the day's high. What is it that you're picking up from experts? Do you think we've cleared some technical levels? Do you think this is a durable rally, or do you think it's just a one-day wonder sentiment booster by the reforms rush that we heard about over the weekend?
So, Nandita, markets have been recouping from the oversold zones, and more importantly, we are very close to the 20-day exponential moving average. So, yes, technically things are slightly better than what they were last week. Obviously, the Trump Putin summit did not have any big takeaways, but yes, a lot of engagement is expected to happen from today onwards, wherein the European leaders, the Ukrainian leadership meets the American President Donald Trump in Washington. So, let's see how really things move, with respect to that particular thing. Post that, obviously, the markets again will be thinking about the US India trade deal, which again the month end meetings are most likely postponed now. There is some delay there, but the negotiations are still on. It's not that negotiations are off the table. Were in a mixed mood today. GST here, at least for the be rationalized. When it comes to the overall market sentiment, cement stocks did well because of the GST rationalization things. We had a whole host of auto stocks hitting record levels. The auto index itself is now at record levels. Probably Tata Motors and Hero MotoCorp, almost every large cap auto name is at 52-week high. So yes, the market sentiment is quite buoyant. We probably have the festive season coupled with rate cuts and now this GST cut. Surely a perfect recipe for long-term investors to gain from the entire reform.
That's true, perfect recipe, of course. But today, I think just want to point out IT and Pharma was sitting out today. Although we did see across the board buying coming in, as you mentioned, auto index at record highs. Realty also saw good traction, mind you, because
Hmm.
cement and other materials there as well. The GST cut will be at play, which is why we saw good rally across cement universe as well. Consumer durables, Yatin, the likes of PG Electroplast, they were hammered out of shape, right? Because of numbers. But now
Yes,
this comes
yes.
as a relief because some brokerages believe that AC demand will go up quite significantly, and of course these companies that have been reeling because of the onset of early monsoon and AC sales getting hit. That's good news or music to the ears for some of these names, which is why they saw good traction. But couple of names I want to point out before we come to our specific stocks. Maruti up 9%, Yatin. I think Maruti small car segment was, flailing, right? And this was an industry demand, cutting GST, right, rates. And this, of course, has come as a welcome move, which is why I think Maruti saw 9% up move because small car segment perhaps will see some recovery post this. Hero MotoCorp, even Bajaj Finance, the likes of Shriram Finance, Bajaj Finance, saw good gains given the fact that consumers will take more loans to purchase more demand. Of course, the impact of higher demand will also be felt by these companies. Ultratech Cement, M&M, Bajaj Finserv, some metal names like JSW Steel also did well. Even the likes of Trent did well on the hopes of GST cut, and other names like Hindalco also did well. What didn't do well were the likes of ITC, L&T, Eternal, some of the technology names like Tech Mahindra, Infosys, Wipro were under pressure. Sun Pharma, from the pharma basket was also under pressure. But Yatin, from the broader end of the markets also, a lot of these GST related stocks were at play, right? But take us through some of the names as well.
Yeah, so a lot of GST names, Nandita, and if you look at the auto pack, yes, all the stocks, cement also saw secular rally. In fact, if you look at the electronic players, the white good players, especially the air conditioner players, were doing well. We had Voltas, Blue Star doing well in trade. We also had PG Electroplast, as you were mentioning, EPAC Durable, again, AC component manufacturer. Were doing well. JK Cement, Ultratech Cement, again top gaining side on the cement pack, and both these stocks at record levels. So clearly, Cement was one pack which was doing well. We also have select housing stocks, finance stocks, especially after this entire S&P rating upgrade. We also had the financial institutions which were doing well. These stocks were doing well. However, we have stocks in the what you call the syntax, those stocks were
Hmm.
slightly weak. ITC, Varun Beverages, Nazara were the key laggards in trade today, given the fact that the government might put, all these sin goods in a 40% slab, which could probably also include some excise duty impact as well as, some impact because of the cess, if at all.
That's true. I think some of these players, of course, really under pressure because of the GST rate of 40% for some of these same goods. But those items will be, much lesser. That's something that, of course, is a good takeaway. But let's focus in on what the brokerages have to say about these GST reforms, right? Of course, market participants will be waiting by for more clarity and more details as we go along. But I think one more thing that will be at play would be the timing as to when these new rates, rationalized rates will come at play. Because, of course, by Diwali, that's what the PM has promised. But a lot of festive buying will also depend on the timing of the new rates, right? Or the rationalized rates. Given the fact that if it comes right at Diwali, then perhaps some of the festive buying may get delayed, and we'll have to, I think, wait for that. But in terms of what the brokerages have to say about some of the sectors, starting with Morgan Stanley on autos. Now they believe that this rate rationalization, in fact, could spark a 2008 style auto upcycle. That's the kind of optimism that that the commentary from Morgan Stanley has been on the auto pack. In fact, they've said that autos that are falling under the 28% GST bracket would now come down to 18%, and there would be sharp price drops as a result, and that could, of course, drive demand and the next upcycle in the auto pack as well. But they've also pointed out that there could be some unknowns, when it comes to the auto universe. But looking at the key factors at play, some of the stocks that they have highlighted that are best placed are the likes of Maruti Suzuki, M&M, Ashok Leyland, among others. In terms of what Jeffries has to say, they've also said that the GST rate rationalization is expected in the fourth quarter of the calendar year 2025. They've said that the savings that the government has made, $20 billion in GST compensation, provides the fiscal room to rationalize the rate slabs. In fact, they say that there is a good chance that GST on cement, two-wheelers, and air conditioners would go down to 18% from the current rate of 28%. And possible reductions for passenger vehicles also cannot be ruled out, according to Jeffries. Now, Citi says that the potential beneficiaries could include medicines, processed foods, in fact, non-alcoholic beverages, some apparels as well, I think, which is why Trent was up somewhere around or was among the top Nifty gainers today. You also have white goods, of course. We saw the reaction play out on some of the stocks. Insurance and cement. Insurance we'll talk about in just a bit because I think the industry, according to CNBC TV 18 sources, would urge the finance ministry to not look at tinkering with rates for GST on insurance because lesser than 5%, 5% or 0% for that matter, would not include input tax credit, and that would weigh in on the margins for insurance firms. So perhaps insurance industry would be approaching the finance ministry and urging them to not tinker with rates because that would mean that they cannot claim input tax credits and they could not lower the premiums as well. So that's one thing that, of course, the street will watch out for. Aside of that, Kotak Institutional believes that the new rates may provide a $2.5 trillion trillion rupees, rather 2.5 lakh crore worth of boost, benefiting mostly autos and white goods and consumer durables. Cement, according to Kotak, may see limited, benefits given the fact that there is low price elasticity when it comes to the cement pocket. Just a few more brokerages. Goldman Sachs, believes that consumer products, which are at the 12% slab, could benefit significantly, and they've named apparel and footwear. Players like Bata, Relaxo, Active, Campus Activewear. These will be in focus given the fact that or metro brands also, because there would be some rate rationalization for shoes below 1,000 rupees, and that would bridge the gap between the unorganized players and the organized players, and also would lead to a shift towards organized. So that's another thing that competition from the unorganized players would go down, and these stocks will benefit greatly, according to Goldman Sachs. But aside of that, if you look at Bernstein, they are of the view that GST on insurance premiums may come down, but we'll have to wait and watch what the insurance industry really does. But Bernstein also has a positive view on the Indian market now. They are expecting high single-digit returns, and of course they've kind of lauded the kind of reforms, GST reforms that are announced. Of course, coupled with the GST reforms, the income tax reductions in the budget, and the rate cuts, seems like the government focus is now moving towards consumption, and more from capex theme. Uh, Market participants are saying that consumption could be the theme from here going forward. Yatin.
Absolutely, and consumption is clear theme. Nandita, two, three things. We have the pay commission revision in the upcoming festive season. We have the festive season itself, which will boost demand, and also the income tax cut. Along with this, GST cut would surely benefit a lot of consumers, probably control inflation, and obviously we have the RBI rate cut also, which will benefit consumption per se. So a lot of things in the short term. Let's see how the market really moves. With respect to this fiscal things that the government is trying to make the common citizen benefit. But autos clearly the favor of the season. We have Maruti as well as Ashok Leyland, zooming in trade. Mahindra and Mahindra also over the long weekend launched new products, new platform, because of which the brokerage community is quite positive. In fact, Nomura has a buy call on M&M with a target of 3736, and they believe that Mahindra and Mahindra is one of the top placed auto companies on their radar. Obviously, the tractor segment is doing well, but the UV segment, the SUV segment, wherein M&M has a strong market share, there we could see some new product launches which will keep the market exciting. In fact, we have the NU IQ platform, which has been launched by Mahindra and Mahindra, and it will have 4 new SUV products, getting launched in the near term. Obviously, what does it do? Vision S, Vision T, Vision SXT, as well as Vision X are the new concept SUVs which got showcased, by Mahindra and Mahindra. Clearly, a big, day for them. Obviously, the acceptability of M&M's SUVs has gone up with the kind of new launches that they have done. Especially, we had the XUV 700, which is still getting strong volume growth. Obviously, if you look at the EBITDA margins, now we have Nomura, which believes that 14% plus margins could be possible because the contribution of SUVs will go up. CLSA also has upgraded the stock of Ashok Leyland to a target of 136. Two things: GST cut as well as the festive season demand will keep the commercial vehicle demands quite strong. In fact, Q1 the EBITDA margins expanded almost 0.5% year on year, and the management is now expecting high teens in terms of the margins outlook. And also we have the steel prices inflation, which is expected to cool off in the near term, given the fact that the last year base is quite high and the companies have taken price hikes recently. So yes, Mahindra and Mahindra as well as Ashok Leyland on Brokerage's radar, and both of these stocks were at record highs for the trade today.
All right, of course, Mahindra and Mahindra and Ashok Leyland, aside of the GST news, earnings and new launches driving gains there, but Auto Pack as a whole saw good traction, in top gear, in driver's seat in today's market. And of course, that's where the consumer interest or buying interest is at the current juncture. But we'll, of course, on Money Control get you voices on whether this is the start of a big run, or whether most of the GST related news is already in the price after today's move. We will, of course, be getting you experts, on moneycontrol.com today, and of course in the coming days as well. But the last stock on my radar, I think, is Vodafone Idea. The stock has not been doing well, of course. Last 1 month or so, it has shaved off over 16%, but it saw a good rally today in trade. Some of the brokerages have targets of somewhere around 8.5 rupees on the stock. I know it's a single digit stock, but given the fact that the stock, or the company rather, has narrowed its losses on a quarter-on-quarter basis, and also the fact that the average revenue per user has improved on a year-on-year basis, found favor with the stock. Also, the fact that the loss of subscribers, the loss of subscribers, has been at a slower pace. It lost some around 5 lakh subscribers, which was much lesser than what other brokerages were expecting. If you look at, just want to take you through what the margin performance was like. It was at 41% vis-a-vis 42.3% on a quarter-on-quarter basis. R2s, that's average revenue per user, grew 15% at 177 vis-a-vis 154 rupees on a year-on-year basis, but it still managed to beat expectations. Street was working with expectations of somewhere around 167 rupees or thereabouts. So that's something that has come as a relief when it comes to investors who may have some position on the stock. But aside of that, brokerages believe that lower interest cost may have aided the bottom line for the company. Subscriber erosion, as I mentioned, has slowed during the quarter. User base slipped by just 5 lakh to 197.7 million. That's a sharp improvement if you look at 1.6 million decline seen in the fourth quarter of FY25. There was a forecast of 1.2 million drop, 1.2 million users by Motilal Oswal. So that's something that they've taken note of. UBS, on the other hand, has also retained its neutral stance to target price of 8.5 rupees. They've said that the performance in the June quarter was broadly in line with expectations, and improvement in average revenue per user plus stable revenues are some of the key positives when it comes to Vodafone Idea, according to UBS. Now, there's also been a change, management change, right? CEO has changed from Akshay Mundra because his 3-year term expired, and he will be, in fact, he will be replaced by Abhijit Kishore for a period of 3 years. Now, we know that the company has been facing issues in terms of its AGR dues. It has been struggling for fresh debt financing amid uncertainty over the AGR liabilities. It is, of course, in talks with DOT, the Department of Telecommunication, and government itself for potential relief on that matter. In Akshay Mundra's tenure, we saw rights issue and a lot of developments, right? So let's see what the new management does. But at least earnings wise, things looking up. Stock wise hasn't really done all that well, much below the rights issue price of 11 rupees. Of course, it has been struggling, but brokerages are seeing some bit of a recovery on the stock prices. 8.5, that's the target that has been pegged by UBS. Stock currently around that 6.5 to 7 rupee mark. Yatin, that's about Vodafone Idea.
Yeah, Vodafone Idea, clearly the stock was intraday higher by nearly 10%, off days high, but 6% higher for that stock. Yes, it's a penny stock. A lot of issues still pending, especially the AGR relief front is still something that the government is contemplating. But let's see how the stock moves in trade. With that, it's a wrap on this edition of Moneycontrol live stream. We'll see you on the other side tomorrow morning at 9 a.m. when Nandita will be talking about a lot of stocks as well as the market action. Stay tuned to Moneycontrol News for all your business news and updates.
Thank you for watching.